Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is your weekly video newsletter. We have a lot to talk about today. So first things first, let's talk about rates. Now, we've been saying this for weeks that there's two different sides to the rate argument. Can rates stay low forever? No. But do they need to stay low right now because of our economic situation? Yes. Has the Fed been having their hand in that and keeping rates artificially low? Yes. Will it last forever? No. So what we're starting to see though is that the bond market is creating ripples. There was a lot of volatility last week. The volatility has continued into this week, and we have seen a slight increase in rates. Now, depending on the type of loan and your specific scenario, that rate change could be anywhere from just 1/8% to 1/4% higher than just it was last week. So as we've been saying, those of you who are on the sidelines, or you're undecided, or you haven't maybe yet sent your paperwork in, or you're still trying to think about how to structure your financing to take advantage of what's going on historically with low rates, get it done now. Get your information in. Let us help you figure out the best solution, because the background, everything changing really fast. And if we're not ready to help you take action on it, then we're going to be watching it from the sidelines, and that low rate train is just going to go and pass us on by. We don't want that to happen to you. Now, the next thing, and this is all going to come together in the end. So the next thing we're going to talk about is Fannie Mae. Now, I've been talking about Fannie Mae with you guys a lot, specifically because of forbearances, specifically because of the efforts that the government has gone to try to help people in their time of need, delay their house payment, not pay rent. You know, they're moving out the eviction moratoriums on foreclosures and more evictions for people who are renting as tenants. And they just this week announced they're going to push that even further. Now, the eviction moratorium was until the end of March of 2021. That's been now pushed out even further to June of 2021. So now an additional 3 months. Now, I've been saying the term kick the can down the road, move the goalpost, and that's once again what we're doing. But here's the problem. In Fannie Mae's most recent call last week, they were talking about a couple things that are pretty startling to us inside the industry, and I wanted to let you guys know about them. Number one, the first thing is that in good news, the average credit score of loans financed has increased. Well, the bad news is that if your score and your credit report isn't getting the effort and attention it's getting in order to help make your score better, then it could be more difficult for you to secure financing in the future. So they reported that last year, the average credit score increased 11 points to 760. 760. That's a pretty healthy number, but I know that there are a lot of people in our society that have a number lower than 760. So if there's something that you need to work on regarding your credit, we have support resources we can help with that, and people that we know and trust that can help with that to help you get your score in a better situation. Now, the other thing that's important that was real interesting too is that they reported that the average LTV for loans financed with Fannie Mae last year was 71%. That means that there's 29% equity if there's a refinance, or that people are putting a substantial amount of money down on the purchase loans. Now, I'm not separating out which one's which are refinances, which are purchases, but the average of 71 loan to value ratio means that every finance transaction they did had about 29% equity, some more and some with less. But the idea there is that the marketplace, from the surge in home prices and low rates for those who are refinancing, are still able to take advantage of the refinance while still leaving equity in their home. And those who are buying houses with money down are doing so because they have money down and they're outbidding other people. We've been talking about this whole bidding war situation with housing inventory for quite a while now. And what this is a confirmation of is that the people who have cash and the people who can come in above appraised value or outbid the next guy are the ones who are winning. The people who can put more money down are winning. The people with solid credit and have money down are winning. So those of you who are looking to buy that next house, if you need to get your financial house in order, your credit in order, your finances in order to be able to win that next transaction, we want to be able to help you with that. And that's kind of the general point here, is that, you know, we've been advocating for getting your financial house in order, building in that financial discipline, working on the things that are going to help you take advantage of the marketplace and what's coming next. And that's how we're going to end today. So that's going to lead to kind of this whole rounding out the conversation I was talking about at the beginning of the video, which is, let's talk about the future. So Fannie Mae's talking about they're going to have to address upwards of $30 billion of underperforming loans by the end of 2021. Now, right now, there's only about $5 billion of underperforming loans. And what they're projecting is that we're going to have 6 times the amount that problem by the end of this year. So that means that the accumulation of forbeared loans and foreclosures that were stalled and evictions that were stalled in 2020, that's now rolled into 2021, that now has an expiration date of June of 2021, is going to create a potential massive problem by the end of the calendar year. And what we were telling you in one of our previous videos was that if you're looking to take advantage of an opportunity where there will be this fallout eventually, where whether it's short sales or foreclosures or evictions, this will happen in the marketplace at some point. All these pressures kind of coming in on one another in concert is going to open up opportunity for those of you who have your credit life in order, your financial life in order, and you're looking to add to your real estate portfolio and make that more part of maybe your long-term approach to your financial goals. So whether that means you buying a second place or buying a second and third, that is coming on the horizon. Now, we were saying this is probably gonna be 12 or 18 or 24 months. We were saying that like 6 months ago, 8 months ago. So now we're getting into the thick of that process, looking to start right now, looking to start this year in 2021. So I hope that this all kind of makes sense and it's kind of coming together to form a full picture of what's going on in housing and real estate. As always, whatever's happening locally in your area is happening locally in your area, just as it is happening locally in ours. However, the overarching themes of people's credit increasing, people having money to put down on properties, and the ability for some and inability for others to get in housing or stay in housing is going to cause outcomes that could work in your favor if you are financially prepared. Those of you who are in your house and your own house, and it's the only one you have, the only one you're ever gonna have, that's great, that's fine. Let's work together and figure out how you can make the best of that financially, either by saving money, cashing out by paying other debts off, thinking long range on how you can pay off your house quicker. Those of you who do not have a mortgage accelerator calculator, let us know. We'll show you how to pay off your house faster if you want to. Those of you who are looking to buy your next home, whether it's a move up, lateral move out of area, or a downsize, let us know. Let us talk to you about how you can get prepared for that so that you are on the optimal side of the advantage when it comes to making offers in the marketplace right now. Thank you guys for watching. I know there's a lot of information happening. I'm trying to do my best to distill it all and put it all together and piece it together so it makes sense. If you have any questions, of course, you can reach out to us, send a direct message, call us, or send an email. And of course, when it comes to your specific scenario, if there's things we can help you with, we want to be a resource to you. Thank you so much for watching, and feel free to send this to a friend, family member, or coworker, someone who maybe you know is in a difficult situation and just needs some advice, or maybe needs to hear a word of wisdom about what's going on in general. Please feel free to send that along to them. Thank you guys so much for supporting and sharing. Have a great week, and we'll see you again next week.